Hello and welcome back. My name is Josh, and today I wanted to discuss another one of these, what I call the Reg A plus investment opportunities. If you don't know what that is, you can click here, but basically it's a way for companies to crowd fund um, money from investors. So it's a private company that's hoping to um, get money from public investors without going public. So some people have called it the mini IPO. Again, I have a whole video up here if you want to learn more about it. This is similar to Miso Robotics, which we had covered in another video, um, but this one's called Flower Turbines. So again, I'm going to start looking into these a lot more. Um, just as a brief background, Reg A Plus again is I'm thinking of it as angel investing, a new form of angel investing. Again, these are early stage companies. They don't have much revenue. They're more of an idea. So you're really betting not on the economics of it, but on the TAM. So that's total addressable market. So you're saying, hey, I think this could be huge. Full transparency, most of these companies probably aren't going to work out. And because it's a complex investment strategy, it's not a publicly traded company that's very liquid. So, if you buy Apple, you can sell it the next day if you need cash. When you're investing in something like this, it's going to be very difficult to get your money out. There's going to be lots of risks and complexities with dilution and stuff like that. And I'll go into that in more detail. But really, these companies aren't going to be able to be valued in a traditional sense, like large public companies, where you can say, oh, here's how much revenue we expect, you discount that to the cash flows to today, and this is what it's worth. This is really betting on an idea and execution. And so I am going to look at the financials, but we can't really rely as much on the financials. Here, we really have to look at the product and the macro environment. Those are really going to be much more the focus than traditionally. Again, I always look at things from three perspectives. One, what's the product? Do people see value? Two, what's the macro environment? Is this a growing market? Is it a shrinking market? How are the competitors? What's management like? And three is valuation. And valuation, typically, you discount cash flow here. We are going to try and look at valuation, but it's going to be much different than our traditional type. So, what is Flower Turbines? They make these turbines that you can see they look like tulips, and they spin this way instead of a traditional turbine turns like that. Here you can see it here if you want. Let's turn off the sound. Here we go. You can see them turning there. And the logic is that instead of having a huge turbine that has to spin like that, and so you need to be in very windy areas, these smaller turbines don't make as much noise. You can put them in much smaller areas, and they need much less wind to spin around, so they're not going to collect as much energy, but you can get a lot more of them, and collectively they can create a lot of energy. So it's a 1 meter turbine. I actually saw a YouTube video about this a while ago, and I think it's a very interesting idea. And do believe that we're headed more and more towards a greener future, and people are really into this, and we do need more forms of renewable energy. So I do think this has an area in the marketplace. So um, if you want to learn more, I'll leave a link below. But if you want to invest, you can go to invest.flowerturbines.com, and there's more information there. And they have here. So they have a document talking about the turbines. So the wind turbines you want to live and work next to. Again, they look nice, they're efficient, they're small, they have high output, so it can be used to charge an electric bicycle, local lights. Again, but this is not meant to replace the power going to your home or something like this. These are much smaller use cases. So again, it is power generation. It is like it can be used for the grid, but you're going to need a lot of these. So it's not like you're just going to slap a couple on your roof and your whole house is going to um, be powered based on that. So let's get into the nitty gritty. This is what you have me here for. So here's the SEC filing they have. So the price per share is to buy in is $70. I think you need to buy 5 or 6 of them. There's a fee. Um, Actually, there's a couple fees. So there's a $2.45 fee. Then there's another $3.5% fee that they add in. When we go through this, we see a couple, I'll say red flags. But one thing is um, the founder, Dr. Mark Daniel Farb, he's the owner, and he currently owns 83% of the voting shares. So you're basically at the risk of this guy. I typically don't like companies where I do like when the founder stays on, like a Tesla, but I don't always love when they have so much ownership, because it basically means that they have complete say. So something like Facebook, which is now called Meta. Mark Zuckerberg doesn't own 80% of the shares, but he owns. They have two-tiered shares, so his shares are actually worth 10 times more voting power. So he has complete say, and that means that even if people say, "Hey, you know what? This isn't working. Let's pivot. Let's do this." If he wants to do it, he can do whatever he wants because he has final say because he's got voting power. So as you can see here, risk factors: our chief executive officer and director has voting control. So that is a risk factor that they even um, what are the other risks? Our financial statements include a going concern note. Going concern means in accounting, going concern means your ability to stay in business. So that's a big red flag right there. It means that our ability to continue as a going concern, i.e., stay in business for the next 12 months, is dependent upon our ability to generate sufficient cash flows from operations to meet our obligations and or obtain additional capital financing, which is what they're doing here. So basically, if they don't raise money, they're going to go broke. Now, that's true of a lot of startups, but again, something to be aware of. This company currently does not basically makes no money. Another one, we depend on certain key personnel and must attract and retain additional talent. So again, it's good that, so in one way, it's good that, the founder is a key person. He's he's invested. He's got 83% of the share, so he wants it to do well. So he's not leaving. So that's good. Sometimes you have founders that just are really important and they just leave because they have not enough stake in here. It's likely he's going to stay. But they need to attract more talent, and the success of our business is highly correlated to general economic conditions. That's true of everyone, so that's not really something. Natural disasters and other events beyond our control could materially adversely affect us. Again, I think it's true, but it's not super relevant. In fact, it could be potentially good. Well, again, not pandemic related, but natural disasters, if they have these wind turbines and then they get ripped out and people really like them, they're gonna have to buy more wind turbines. So it could be that they sell more. So I don't really see that as a major risk. Developing new products and technologies entails significant risk and uncertainty, obviously, and the growth of our business depends on our ability to finance new products. So really, to me, when I look at this, the main concern is, hey, we have no revenue, and there's more. Sorry, uh, we have no revenue, and there's no, and we might go out of business if we don't raise money. Those are major concerns. But again, this is the risk section. They're going to be starting with the negatives. Here's some other ones. We face intense competition in May. Many of our competitors have substantially greater resources. That's obviously an issue. Now, they're talking about their competitors here in renewable energy, GE, Siemens, Enercor, but they're not doing this exact thing. Again, I don't think anyone expects that this kind of company is going to become the size of GE, which is worth tens of billions, hundreds of billions. But if this became a multi-hundred-million-dollar company or tens of millions, that'd be a big win. So there's definitely competitors, but there's also potential that these competitors could buy them off if Flower Turbines see significant growth and market adoption. If our products fail to perform as expected, we may have to recall them and our ability to develop, market, and sell them. Obviously, that basically there's not enough of a history for them to have data to say, oh, we know that they're going to last 10 years, no problem. So, if they only last 3 years and then they become faulty, maybe there's a warranty. So maybe this undoes what I said about the natural disasters. But yeah, they don't know how long they're going to last. But again, not something too bad so far. We are exposed to risk associated with product liability claims, same kind of thing. We could incur substantial costs to comply with environmental, health, and safety laws and regulations and to address violations of a liability under these requirements. Yeah, still, I'm not that concerned. Our ability to comply with regulatory requirements. Okay, so they're going to have more costs associated with now that they're going to have investors, they need to write more financial documents, which cost money, accountants and stuff like that. And they're a very small operation. That's true. The U.S. wind energy is significantly impacted by tax and other economic incentives. A significant change in these incentives could, okay, yes, I personally think that the U.S. is going to pump and other countries are going to pump more money into these economic incentives. But if someone comes in and pulls them away, it could impact their business. So obviously, this is something to be aware of. Changes to trade regulation could have an impact because depending on where they build them and then ship them, risk of borrowing and restrictions in our ability to borrow, intellectual property could be unenforceable or ineffective. This is an issue. So they do have a patent, which is important. If you've ever watched Shark Tank, they always say, "Do you have a patent on this?" If they don't have a patent on the technology, basically means, "Hey, we're competing with everyone else. We think we're better at marketing or producing it." This is not what it is. Our most valuable asset is our intellectual property. I want to highlight this. This is the most important phrase in the whole thing. What they have is a technology that's this little turbine. If someone can copy it and do it cheaper, again, there's other competitors that have more money, more manufacturing expertise, all this. If they can't enforce this intellectual property patent, the business sucks, straight up. Now, again, most companies are going to we have strong intellectual property rights in this country and in most EU countries, the US, Canada. Could someone in China try to copy them and rip them off? Yeah, it's possible, but where intellectual property is not as enforced. But on the whole, I think that it's a risk to be aware of, but it's important to know that this is what they're really selling. And to me, there is value there. Even if the company doesn't end up making these, maybe they lease the intellectual property to a manufacturer who wants to do it and sell it, and they get a share. So again, the most important part of this, really all they have right now is the intellectual property, which they're trying to turn into a business. They say, hey, we have this great idea. That's really all intellectual property is. We have a great idea for a product. We're going to try and produce the product. Maybe they can't produce the product. Okay, we're going to sell the idea to someone else. We're going to lease the idea to someone else, and they'll produce it, and we'll get a cut of it. But yeah, that's really all the business is right now, and that's what you're, again, with an early stage investment like this, you're really just investing in the idea. We rely on third parties to provide services. Obviously, if their partners don't do it, they can get in trouble. We are unable to adequately control costs associated with operating our business financial conditions, and operating results and prospects will suffer. Obviously, we do not own all of our intellectual property. That's obviously an issue. We have a royalty-free license to use certain patents, trademarks, copyrights, all in the 20-year royalty-free worldwide. Assignment to Leviathan. Therefore, our investors will not receive any benefits associated with the partnership of such intellectual property rights. Okay, not an issue actually. Risk to the offering of our shares. So that was all about the risks of the business. This is about investing. This is the risk of actual investing. This offering is being conducted on a best efforts basis and does not require a minimum amount to be raised. As a result, we may not be able to raise enough funds to fully implement our business plan. So I actually think that's not true because it says they've raised over 5.5 million. So I think that that's more than their goal. So I think they're good. But yeah, basically, let's say they only raised 100,000, then they're still in Schitt's Creek. Sorry, we're offering up to 14 million. Okay, so they still have a long ways to go. So they've raised 5.5, so they're a third of the way. Okay, well, just over a third actually. Terms of subsequent financing may adversely impact our investment. This is what I always talk about, dilution. And they actually have a part here on dilution. Let me skip there. There's a lot on here that's not too much that's actually important, but here we go. Dilution. Dilution means a reduction in value, control, or earnings of the shares an investor owns. Immediate dilution. Here we go. The type of dilution that hurts early stage investors mostly occurs when a company sells more shares or other equity securities in a down round, meaning a lower valuation than in early rounds. Here's an example. Your name is Ben, you invest $20,000 or 2% of the company, valued at $1 million. The company then does very well, sells $5 million in shares to a venture capitalist at a valuation of $10 million. Well, that still dilutes yours. Your now stake is only worth $1.3 million, but the value has gone up, so it's up 10 times. So that's my shares. Oh, in a value of, yes. So basically, the company is worth 10 times more, so your shares are worth 10 times more, but you actually don't own the same percentage of the company. So your percentage has gone down from 2% to 1.3. But then the company runs into a serious problem. And in order to stay afloat, it raises $1 million at a value of only $2 million. So double what it used to be, but a fifth of what it was before. Ben now owns 0.89 of the company, and his stake is only worth 26,000. So still more than he initially invested, but you can see how your piece of the pie is shrinking. And that's assuming, again, remember, the company's now worth $2 million, so twice what he originally it was worth, and yet his shares aren't worth double. His shares are only worth, what's 26 over 20? 30% more. That's how dilution hurts, is the company can be worth twice as much, three times as much, four times as much, and your thing only goes up 10, 20%. So, when you're investing early stage, the real thing you want is that huge upside. If you don't just want 20 or 30% upside, you can find that in the stock market. What you can't find in the stock market is the 10x, 100x upside. Investing in Uber early was 1,000x upside. That's a huge investment. You put $10,000 down, you're set for life basically. If you invest in one of those. So to me, the fact that the dilution can take away that massive upside, that's the biggest risk to me. So as with anything, dilution is going to be a risk here. Now, let's do revenues. They talked about it. Where was it? Out of here. Oh, here we go. So they had revenues of $0 in 2019, and that went up to 100,000 in 2020. Now they still lost. In 2019, they lost $545,000, so $500,000 in losses. And that's all operating expenses because they had zero in revenue. Now that they have $100,000 in revenue, how much did they get in 2020? Here we go. For 2020, our net revenue was 105, resulting in the sale of turbines and chargers compared to zero. Our cost of net revenue. The cost, so that's the gross profit. So your gross profit was 43,000. So 45%-ish. No, sorry, 40-ish percent. So that's pretty good. So they have 40% gross margins. Operating expenses were obviously very high. Our operating expenses was $400,000. So they lost money, as they mentioned. Uh, Losses from operations, they lost $350,000. So again, to me, this is where you can't really do too much. The company grew, it sold 100,000, but in order to really grow, they're going to need to sell the shit out of these, and they're going to need to produce a lot. So there does sound like there's good gross margin, so there's potential profitability. I like to see that. I hate to see when a company has zero gross profit. Like, you can have actual losses without gross profit losses. So gross profit, again, is the input cost to make the turbine versus the output cost to sell it. They're making money. But there's cost to buy the machinery, cost to pay salesmen, stuff like that, and to scale. There's accounting fees, there's payroll fees, HR fees, all this stuff, fees for financing to grow. But the goal is once you get to growth, those costs will be low, and you can make money on the 40% gross profit. So that's positive. Again, I'm not really going to give a recommendation here because it's not my place to say. Again, this is always my opinion, not advice. But if you believe that you will see a lot of these little turbines, if there's a market for a lot of these little turbines all around the world, charging for your e-bike, e-scooter, or small mobility, then I think this could be a really interesting one. Personally, again, I think this company is based in Europe, where there's a lot more biking. I actually am a big biker now. I've been biking a lot lately, and I'm gonna get an e-bike. And I recently read actually that now there's more e-bikes sold than bikes, so there could be a big potential for this. And I do think it's an interesting idea. I still am too hesitant on this idea. I think it's really interesting. I personally won't be investing, but I really do hope they do well because I think this is an idea that would be really good for the world. So just yeah, you know, I like clean energy, peaceful, quiet, and again, I do think they're very pretty. So I like it compared to other alternatives. I'd like to see more people biking and using e-bikes. Less cars on the road, less congestion, less noise. Street near me recently closed down for construction. It was actually so nice to just have no cars and just kind of have like a promenade, where people are just walking and going into shops, and it's actually very good for commerce, the small businesses on the street. So I hope they do well. I personally won't be investing just because again, there's too many uncertainties. However, as I've mentioned many times before, all of these little investments are like startup and angel investing. So like it's unlikely any individual one does well. It's like honestly, the odds of each one failing are pretty high. However, if you invest in 5 or 10 of these and one of them hits it big, it's gonna pay for all the losses. So again, I personally am trying to decide, do I want to get a basket of really risky startup investments, or do I want to be a little safer and just invest in things I can better understand, like the stock market, where there's much more accountability and much more metrics where I can value the company. And right now, that's where I'm at because that's my strength. However, I am going to keep looking at some of these smaller deals. And if I do find one that's interesting, I'm going to call it out and I am going to put my money where my mouth is. And I really do hope, because to me, this is a really interesting way of investing in these small businesses that I think can to get in at the ground floor. So I'm really interested. Let me know, are you invested in Flower Turbine? Have you heard of it before? If you are, let me know in the comment section below. Hopefully this was helpful. Thanks so much for watching, and talk to you next time.